This is Robert Kraft, and I'm your host on SNN.Network, and we're a proud media sponsor for the upcoming Precious Metal Summit Beaver Creek being held virtually this year. And joining me right now is Justin Reid. He is the CEO and director of Troilus Gold. It's a publicly traded company. I got two symbols for you, TLG on the TSX and CHXNF on the OTCQB. Justin, thank you for joining me today. How you doing?
We're great. Thanks for having Troilus on today.
It's great to have you on. So let's start with a very quick overview and history of the company, and then we'll go from there.
Sure. Troilus is a publicly traded company on the TSX. As you mentioned, we've only been alive for 2.5 years. We formed after purchasing the Troilus Gold asset out of First Quantum 2.5 years ago. And Troilus is a historic mine, produced for 14 years, produced 2 million ounces of gold and 70,000 tons of copper in northern Quebec. Because of metal prices and the lack of exploration and in a general bad market, Troilus was shut down and the corporate efforts were on other assets, mainly Cobre Panama, which is one of the, the fourth largest copper project in the world. They were taken over by First Quantum, or Inmet was taken over by First Quantum hostily, and the asset was just left. We bought it after being on care and maintenance and different stages of remediation. And we purchased it, I guess, 4.5 years ago. We did 2 years of work and then came to market. During that time, we've drilled 80,000 meters. We've taken the resource from 2 million ounces underground to 8.1 million ounces open pit and underground asset, making us one of Quebec's largest developing gold assets.
So what would you say makes the company unique and different compared to some of your peers out there?
Good question. One, we're in Quebec, which, as most investors know, is one of the best mining jurisdictions in the world. Two, we're a brownfield site, so we're not reinventing the wheel. We know what the ore body's like. We know how it processes. We've done something that Inmet didn't do. We drilled. It's not that they did bad work. It's they didn't do any work because of corporate objectives. So in a very short period of time, we put a new geologic model on an old asset, which is a standard story in the mining space. And we have a 98% hit rate on our drilling. To grow 6.5 million ounces in 2 years is unheard of. And then as a brownfield site, all the roads, power, infrastructure, earthworks, tailings facility, mining lease, permitted tailings is in place. And we've spent the last 2 years and several $1 million upgrading all the infrastructure. So we're ahead of the game. There's a tangible inherited infrastructure, which we think will bring $300 to $400 million off of our CapEx when we put out our engineering. So in a racetrack of development, we're kind of halfway around. We're not starting from the beginning.
So I have to ask you a quick follow-up. What would you say is the number one question that you get asked from investors that maybe you'd like to address on here?
How did you get this mine and somebody else didn't? That we get that all the time. And I'd like to say,
I feel like that's like the number one question every junior mining CEO gets of like, I've asked that a few times on here, just like, wait, that's been sitting around for 25 years. Like what, what took everybody so long?
And, we'd like to say that we're really, really smart, but I think in this case, we were really lucky. When we were able to, First Quantum's focus was elsewhere, in Panama. This was the only Canadian asset. It was an exhausted gold mine that had a low-grade resource left. When we came in, there was a $5 million environmental liability sitting on top of this that I'm sure First Quantum didn't want. The Canadian and US dollar was on par, so nobody was looking at Canadian gold. And if you were looking at Canadian gold, you were watching Detour, you're watching Malartic Ramp, you're wondering what was happening at Young-Davidson. So it's really kind of the land that time forgot. We're north of the Abitibi. The Fortet Evans Greenstone Belt has never been a real focus. And so we just kind of quietly slipped in. We took a chance Our team is the largest shareholders of the company. Our management team has bought 10% of the company in the market, and we're putting our money where our mouth is. So yeah, we got a little bit lucky, and then we put some great geological work behind it and grew what just had never been drilled.
You alluded to my next question a little bit. I have to ask, what is your background? How did you become a part of the Troilus Gold team?
I'm a geologist by training, a couple degrees. There, worked for Cominco and then Tech Cominco for a number of years in the project group. Did an MBA and then went into the brokerage business and was a founder at Sprott Securities, which turned into Cormark. I was a mining analyst for 9 years. Then I went to National Bank and I led the global mining team there. And then I moved across the street to the dark side, to the resource side. And I was president of Sullivan Gold, which was, we were developing the Shuindo asset in Peru. Great asset. We got it through feasibility, through permitting. Then we were taken over by Rio Alto for $400 million in 2014. Best performing gold stock in the world that year, which wasn't hard to do. You just had to be green. Then Rio Alto got taken over by Tahoe, and then Tahoe got taken over. So, this asset, it's great to see one of our assets actually make it to production and generate substantial cash flow. So I've always been involved. And then as a mining analyst, I covered Inmet. I covered the Troilus mine. I covered their portfolio assets, and we recognized that there was not a lot of capital being reinvested into that mine, which simply means they weren't drilling. They weren't expanding the new resource. Their focus was to get a gold multiple as a base metal company, and they accomplished that. Troilus was never a priority asset for them. We simply went and did the things that they didn't have the corporate budget or focus to do. Their money went elsewhere.
And to close it out, from what you can tell us, what would you say are some of the company's value catalysts now for the rest of this year going into 2021?
Sure. It's been an incredibly busy 2.5 years. It's just flown by. Not only have we added a huge amount of ounces, ounces are only good if you can mine them. So we have 3 drills that are commencing right now. We'll drill 30,000 meters this year, and then, the drills are just going to keep drilling. Infill, further expansion at our main pits, and but probably the largest catalyst for us in the immediate term is we're going to be putting out our PEA. Our PEA is out in a matter of a month. It's going to be that first flag of value in the ground that shows that Troilus not only is a substantial resource, but it's likely going to be a significant contributor to Quebec mining ecosystem. So that's going to come out very shortly, and then you're going to have continued engineering, continued exploration, various permitting events, metallurgical work. So we're a very newsy company. Company's running very hot right now, balance sheet's in great shape, and so we're expediting this towards a production decision.
And with that, where can my audience go and find everything they need to know to follow along the Troilus Gold story?
Certainly, just visit our website at www.troilusgold.com. All of our contact details are there. Our whole team's available to anybody at any time.
Justin, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next update.
Thanks very much.
Thank you. Again, my name is Robert Kraft. I'm your host on SNN.Network. We're a proud media sponsor for the upcoming Precious Metal Summit Beaver Creek being held virtually this year. Justin will be there presenting Troilus Gold, and thank you all for watching.